All right. Good morning. Good morning, everybody. It's a 4-day week. We're on day two. When I worked in the oil field, we would be gone 2 weeks at a time, 2 weeks at home, or 1 month at a time, 1 month home. And we would count the day done when we woke up. It's a little weird, I guess. But we're halfway through the week if we count today done. Small caps are doing really good this morning. Keep in mind, we've seen this play out a lot where small caps perform well in the pre-market, then we get into the regular session and they take a back seat while the other indices come up and outperform. So we'll see if today is going to be different, but that's sort of the play we expect. Otherwise, Hong Kong is flat, Japan up 1%, and the other US indices near those same levels. It makes sense, right? It's the cycle that we've been seeing. Start the week out holding the line or trying to rise a little bit, washing it out by the end of the week, closing lower than where we started, just working our way lower in the chart. We got a lot of Fed speakers today out there chipping their teeth, not really expecting that they're going to say anything that'll be a surprise. They're all pounding the drum, singing from the same hymn book. Messaging is just that, right? They're out there just trying to unify a clear message. And we're not really expecting any shock and awe or wow out of that. We are going to continue to get jobs data all week, but with us being gone on Friday, we're going to miss non-farm payroll. So today we got the JOLTS. Easiest way to remember this one is the take this job and shove it number. What they're tracking here is the perception of how easy it is to leave your job and go get another job comparable to or better than the one you had. If you remember what it was like back during the global crisis, 07, 08, if you had a job, man, you hung on with both hands and fingernails to everything you had because you kind of knew if you lost that job, there wasn't anything else out there. And that's a real good representation of what the JOLTS is trying to measure. And of course, we have the threats that could possibly come out of the White House. You can see that our president is trolling other nations this morning on social media, just stirring the pot. We're starting to see rate cuts begin to get priced back in again. So now we've got hikes and cuts being priced into the market. There's just so much indecision out there, a lot of unknowns, and this makes for a very dangerous long-term outlook, right? I've been listening to people who are liquidating their holdings and getting into cash and sitting on the sidelines, and others that are happy to take advantage of these lower prices and are buying things that they've been eyeing that had been too expensive. It all comes down to your comfort level, I suppose. but there's just a whole lot of confusion, doubt, uncertainty, and things like this that just provide absolutely no insight. The markets aren't giving guidance. All right, risk from the White House is low. It's at 15, but this is for the more formal events and doesn't provide risk on the president trolling people with his phone on social media. Overnight volume at 142,000. They are in here participating. They're not sitting out waiting on some economic calendar event. You can see that we're getting near yesterday's RTH high. And if we get through that, we've got that Globex spike to try to get through. And then we'll be outside of yesterday's range. We're getting there. At this point, it really feels more like we are just trying to close a gap doesn't really fit, but just trying to get back to this start point right there where everything washed out. Now, whether it will end up being or behaving like a liquidity gap will be completely, it'll be obvious, right? If this is it, we're going to get back to it and tag your it. After that, the markets would have completed what it was trying to accomplish, and it'll have to make a decision at that point if it wants to continue going higher from there, or if now that it's done its job, if it were going to backtrace through that run up. The Globex left us with some pretty decent levels, so it doesn't really matter which way we go. We got opportunity. Keep in mind, as long as we are within yesterday's range, the price action is likely to be sloppier, especially if we're in our own Globex range inside of yesterday's range. $63.42 is the put wall. To get there, we've got to break that 63.50 level. We've been talking about 50s all the way down since, 7,000, and they haven't steered us wrong yet. So we just want to continue to focus on that one level at a time. Yesterday, we talked about rejecting from Friday's midpoint. We spiked up and hit that level yesterday in the Globex, and that was it, right? That was as much as we got, and we wasn't able to get above Friday's mid. Wasn't able to get there, let alone stay above it. And we washed back out below Friday's low. Now we're making another run at it. It's 64.80, and we need to see if we're going to be able to get to that level, get through that level, and stay above that level. Once we do, we still have this zone up here, basically the wick of Friday. 65.40 to 65.65. That'll cover 65.50 if we're going to try to make a run back up, and that is basically the 10-day moving average. Remember, we get too far away from that 10, we're going to mean revert and go back at it. So this is what we're watching for right now. Looking at the count, right? It's about time for us to make a run to the upside. We're not talking about, getting way up here anywhere. We're just talking about a little move to the upside. You can see where the start of these runs were and us getting maybe to the midpoint. So start of this run, getting maybe to the midpoint, gets us right around that 10, a 10 MA tag. So at the moment, this still looks like a sell the rip opportunity, just like these events were sell the rip opportunities. Stands out pretty easy, doesn't it? So that's what we're looking for. It doesn't really look like we're going to get more than Friday's high out of it. If we do, I mean, we could overshoot. And if the news is positive enough, if the headlines have enough fuel in them, we could overshoot Friday and try to challenge that 20 period moving average, which would be another 50 points higher. Instead of 65.50, we'd be looking at 66.50. But at the moment, that just feels a little too far away, like maybe a mirage in the desert. Level by level, it doesn't matter. Just get above Friday's mid. We'll target Friday's high and the 10 period MA, and we'll go from there. All right, we reached the ADR early in the day, which means we have a nice opportunity to get to the other side by the end of the day. The thing is, we didn't leave. We got there really early. That should have been it. But after we hung out for a while, we did it again. And then we hung out for a while and we did it again. So we're still there. That really calls into question the idea that we're going to go to the other side by the end of the day. It's not bearish to look down there and think that we could go to the other side, because it's simply a part of price in the wave that it generally creates. But we still need to break down if we're going to go there. So level by level, get back below the red line. That's the ADR half. Cut through this price shelf that we've developed here, 66.42. Once we break that level, it's game on. Target the Globex low and then the full, the ADR half on the bottom side, 63.19. It is worth considering the Globex midpoint that we're working with. That's going to provide a little bit of a speed bump. And when we get over to the volume profile for today, it's likely we're going to find some structure around this level. That's the RTH mid from yesterday. So that tightens up our boundary here. Or if we want all of yesterday, swing over there. I don't think there's anything. Yeah, we were good where we were. You can see that the Globex low from this morning matches up really well with the full ADR of yesterday. So break that, break the Globex mid, challenge the RTH low, Globex low, and then the ADR down here. Nothing to it, right? To the upside, it's a little bit cleaner. Globex high, yesterday's high. You could add in the RTH high to that. Then the full ADR up here. We do have a 111 and 1236 up here. we would have to get through those before we get to the full ADR. Same thing to the downside, right? There'd be a 111 and 1236 down there. So it doesn't matter which way we go. We've got the levels. We just need to get going. If you don't want chewed up, let it get the heck out of this box before you do anything else, right? I mean, these are really clean swings at the moment, but it will begin to deteriorate if we stay in this tight little range. Still firmly below the weekly pivot. Today's floor pivot is lower than yesterday. That's bearish. Price opened underneath it. That is also bearish. We've hit today's pivot, so no MDP. We are above today's pivot and the pivot channel. That puts us in a mildly bullish posture. Today's channel is narrower than yesterday, but it's still a relatively wide channel, so we anticipate that breakouts will fail and that we will close inside the range of yesterday. Just keep in mind that these channels don't make price break out. They won't stop them from breaking out. They just provide analysis on price. So they have no influence on what we will or won't do. Getting through that Globex high puts us back inside the weekly channel. And then, of course, we got 6511 cog line, which is the weekly floor pivot. So for a run to the upside, we're going to have to deal with that level. Yesterday's range was relatively muted, so it's likely that today's SNR lines are going to be a lot closer than the ADR lines. Yeah, we're already at R1. I know that's going to be hard to see on the screen, but we'll work our way into it. 64.56 is the R1 level. There is a red line right there. So we ran up into it and we've been fighting against that level, R1. Typically speaking, there's a market phrase that says R1 to S2. This is S1. S2 would be below that. One of the things that I like to do every day is look at the distance from the floor pivot to R1 and then look at the floor pivot to S1. Whichever box is greater or whichever distance is larger, that's the bias that the indicator is providing. So it's suggesting right now with this very narrow box that it's more likely we go down than up. Path of least resistance, right? This distance is greater than the other distance. It's not always so obvious to see. Sometimes you'll come in and these boxes will be very close together in distance from the floor pivot. In situations like that, you just call it a wash, right? There's really no bias in one direction or another. But yesterday and again today, it's been relatively obvious that the downside is the bias that the indicator is building in. So here's S2, 6286. If R1, then S2, that is a thing. These market truisms have been around for a long time. They're not set in stone. It's not guaranteed to happen. It's not a promise that it will happen. But it's happened often enough that it becomes a phrase that people know and remember. If we get above R1, that offers R2. We just got to claim it and keep it. And to get to R2, we're going to need to get through that cog line or the weekly pivot. all things considered, we don't really hang out a lot around that weekly pivot. Kind of feel that if we get in that channel, price is going to want to get out of it relatively quick. So that could mean that we, just get kicked right back out of the bottom, or that we really rush through the levels and to get out the top of that box as soon as possible. All right, last week kind of gave us this broken P-shape pattern. It's not a very good one, but it's there, with the point of control just underneath that 6650. And right now we're developing all of our work down here, and we're in the value area as much as we can call it that. Right now it's just some lumps, right? We don't really have a lot down here. It's a very narrow structure. Everything's compressed. And looking back, we had a little bit here and a little bit here, but that's not helpful, right? We just really don't have anything down here. We got to break that Globex high, get through this shallow area, and then begin to challenge this large just structure up here, 6650. And it is large. I mean, that thing's almost 100 points. But we've got 100 points to go when we get above 6,500 to even get to that box. It kind of goes back to my argument that if we can break above this Globex high, things get narrow. The roadblocks that stand in our way thin out for at least 100 points, and we don't start running into any real trouble until we get into that 6,600 again. Now, of course, we can look at dealer positioning, GEX levels, open interest, all this options data, and show some key levels above and below dominant structure that could hold us back and make us work for it. But we're in a negative gamma environment, and I would be counting on the dealers to help fuel that move to the upside. If we were in positive gamma and we broke out and made a run higher, they would sell into that, right? They sell into strength. But we're in a negative gamma environment. So if we break out and make a run to the upside, they will be buying it, not selling it. Their buying will add to the buying that could push us that 100 points and get us into that 6,600. Once we get into that, coin toss on whether or not we're able to defeat that structure. I wouldn't be looking to defeat it, right? We've been working very clearly in a neat, clean, organized descent. We're not seeing panic or paranoia. It's just been really clean, organized selling. So it makes sense that we get another run up so that we can put in a lower high, and then, we begin working to put in our new low. This last low wasn't really much worse than the previous one, right? Been watching to see if we overshoot. So what we're looking at here is how far is this, and then how far is this. Well, this one extends further than this one, so the drops are accelerating. We're going, down farther, faster. And then this latest one, if the distance each time gets greater, then we know that the move is accelerating. But if it starts to get narrower again, right, if the distance that we travel isn't as far as the previous distance, then things are slowing down. So this looked like a much deeper move than the last one, but they're nearly comparable. So at the moment, I'm looking to set the lower high and then let the market tell us what it's going to do from there. But the system isn't broke, the pattern hasn't changed, and we're still just running organized selling. $10-day, 30-minute volume profile and TPO. As I mentioned yesterday, this thing ought to be a little narrower by Wednesday afternoon, maybe into Thursday. We're cutting off around 50 points. And the only thing that's going to stretch it out, very likely, is a continuation to the downside. We are a long ways from this point of control. And at the moment, we're fighting against this value area low, which lines up really well with that Globex level that we've focused on this morning. We rejected through this level yesterday on that spike up in the pre-market. We got above, wasn't able to keep it, came back down again. And at the open, we basically opened on that level yesterday, or just slightly above it, but still wasn't able to keep it. So getting a breakout of yesterday's high will put us firmly inside this box, and we'll focus on 66.32 cog line or the point of control. Get through that, and we're through the worst of what's overhead. I just don't see that we're going to be able to get there. 6,600 is already a stretch. Getting to the cog line on 32, I think it's just more than we can chew, right? Might be able to get a big bite, but can't chew it, then it's not worth it. Level by level, I guess we'll see how it plays out. But that's the largest structure that we've got to deal with. And if we get within 100 points of it, we will begin to gravitate towards it. All right, the POC level from Friday seems to still be in play. We're interacting with it this morning. It doesn't hurt to keep it on your radar if you don't have anything else to focus on. You don't have to have it, I suppose. You could still just mark out our own Globex high. That would be more than enough, but it's still the dominant structure. And if you evaluate Friday's levels a little bit, that point of control was at the lower end of this larger zone. So it's not to the tick. It's spread out a little bit. The same thing with yesterday at that Globex high. We didn't spend a lot of time there, but we got quite a footprint out of that. No new VPOC from yesterday. We cut through that level already. Doesn't seem to be providing much one way or the other than it is lining up nice with this low that we've put in. So if we was to break that to the downside and then try to work our way back up through it, it would likely be difficult to get done. So we got this structure and then this one down here. So if we break this low, we would aim for that 63.92 cog line. If we manage to hold above that somehow and try to make a run back up, that level might be difficult. That's even if we get below it in the first place, and so far, nothing's suggesting we're going to do that. Other than, if you get to one ADR early enough in the day, you can go to the other side by the end of the day. That would have us looking to the downside. I know the market is pointed upwards. Everybody's looking up. The thing is, they will get frustrated with their efforts. Look at these attempts to break out, and they haven't been able to do that. How many more times are they going to try that before they give up, right? Before they wash it? There's also the concept of liquidity. So we'll just suppose this is a bowl of popcorn, and every time price gets up here, it's another hand grabbing popcorn out of the bowl. How many times can you grab popcorn out of the bowl before there's just no popcorn left? So if the liquidity that's over our head is what's holding us back, at some point we're going to get up there and there is none left. and they're going to have to reach farther to find some liquidity. That will be our breakout. So the question at that point becomes, what's going to happen first? Do we run out of popcorn, or do they give up in frustration and wash it back the other direction? That's what we want to be watching for this morning. A lack of participation. You should see a lot of that in the dome, right? On the active trader, whatever you want to call it. See if it thins out, or if they just keep reloading that level every time we cut through it. We are 3% below the 10-week. This is not the danger zone. We'd have to get below 4.5, or even closer to, yeah, 4.5 works. Get below that 4.5 on the 10-week. Then we can start worrying about danger. But until or unless that happens, the whole idea of being, quote, oversold doesn't really suit us. I mean, we're down, right? That's not in disagreement, but the phrase of being, quote, oversold, it's misleading to newer traders. It's frivolous to throw it around, and it just confuses people. So you want to use it sparingly, if at all. And it doesn't apply here. Things aren't extreme on the downside, and you can measure how far away price is from the 10-week. Keep track of it. If we get more than 4.5% below the 10-week, things could get a lot nastier fast. On the 10-day, we're not even 2% below the 10-day. We would need to get below 3% before we start to get really worried about market structure and dynamics. So it's not broke. It's not even extreme. Keep your eye on the distance from the 10. If we get less than 1%, then we want to target less than 0.5%. And if we get less than half, we can begin to gravitate into it. Also, once we start getting near it, they'll start using it as a target for their options positions. So you should see that start to pick up in the order flow in the options chain if we continue to make a run to the upside throughout the morning. Got to get there first. Got to get through that Globex high that we've got this morning. $7,000, huh? Oh, April 2027. Yeah, I got you. You know, it's yeah, I can't argue that eventually the market will turn around, right? Eventually. Looking at what's up this morning. What's up? The Mag 7 up volume is up. It was down more than 20% in a 5-day period. And after something falls more than 20% in 5 days, you kind of expect that it's going to go up a little bit. So seeing them up this morning doesn't really feel very bullish. It feels more like a dead cat bounce, a knee-jerk reaction, a little bit of bump to the upside, just so that we can sell the rip and continue to move to the downside. Gold miners, junior miners, airlines, uranium, chips, Mag 7 again, banks, generic tech, metals and mining, growth, value, uh, software, financials, building materials, everything is up this morning. If we were looking for a rally day based on market breadth, oh, we got it. The problem is market breadth hasn't been driving the boat, so we can't rely on getting a breakout from market breadth structure alone. We're going to need help from the VIX and crude. We're going to need something else to really provide us with some assistance. But if we leave it to, dealer positioning and market breadth, I mean, we've got the market breadth. We would see the dealer positioning once the market opens and we start seeing that options flow work out. Looking at what's down this morning, well, the VIX is down and nat gas. China's down a little bit, but not enough, right? The benchmark that I use is 0.5%, and we're nowhere near that. So all things considered, we got a relatively easy setup this morning. Things are looking really nice, and there's nothing wrong with the current situation. Get through yesterday's high and challenge things to the upside. You got 6,600 as a big structural target, and unless the run happens with some fantastic headline that we can't even imagine, then it shouldn't get above that. Be careful of this thing that's called force buying or a grind higher day. It's just one of those days where we just keep going and going and going, and none of our tools are supporting it. The flows don't respect it. There's absolutely no way to tell what's driving it, and it just keeps going and going and going anyways. I hate those kind of days. I mean, it's nice because you get some decent moves in the market, but there's no way to validate why it's driving, and then there's no way to tell if it's speeding up or slowing down, and it just keeps going and going and going all day. Those can happen to the downside or the upside. Today we would be looking for that to happen to the upside, and it sucks just because of the whole validation side of everything. We're not seeing any of that as a signal this morning, but that's kind of the point, because you wouldn't. That behavior happens with no tools or signal picking up on the driving force. Otherwise, if we break out today, we want to see what's driving the flows. We've got the market breadth, and that certainly could drive the flows, certainly. But what else, right? The tick wouldn't drive it. It's more of a speedometer, right? The miles per hour in your car isn't what accelerates your engine and makes your car move, right? Right, it's showing the move. You're exactly right. So it's certainly helpful to keep your eye on the tick, but it's not going to tell us what's driving the market. Should be oil, VIX, dealer positioning, market breadth, right? It's going to be one of those, and we just check the box. Is it this? No, move on. Is it this? No, move on. And then we cycle back through and we check it again and again and again throughout the day. We should see the why for the breakout today. It should be fairly obvious. I'm just warning about those grind higher days, because we haven't had one in a while, and it just feels like we're kind of due. But that's not a very good reason, right? Otherwise, while it's really easy to look higher today and think we're going to go up, play what you get, not what you think, right? The phrase that I use, although I haven't used it for a while because somebody got salty, nobody cares what you think. I don't care. The market doesn't care. Your bank account doesn't care. So if it starts to break down, trade it down. Doesn't matter if you think we're going up. Trade what you've got, not what you want. So if we break this structure to the downside, then we've got our lower targets, right? If we break it to the upside, we've got our upper targets. It really is as simple as that. All we got to do, get out of the box. GTFO. So that's what I got, guys. Be careful, be safe, have a good day. Enjoy what we get, because never know what we're going to get tomorrow. Speaking of, I'll see you all tomorrow.
Recording stopped.